you can see my screen, right? Or Messi, you're here.
Yeah, I can see it.
Oh, okay. So good evening, everybody. Today we're going to first of all, for those of you that are here, please, if you've not gone through the basics channel, just do that between I think this is Friday already, so you have the whole of the weekend to, number one, set up your trading view. That one is very important because by next week we're going fully into the TA. This week was just like intro, and we've done like majority of the introductions when it comes to FOREX, right? When we get into the synthetics, we start all of those ones. But for what we've done so far, like by next week we should move into the proper technical analysis. And you need your trading view to be set to be able to participate, follow, and do your assignments. Then secondly, I already dropped the follow-up on how to create accounts on Deriv, fund your MT5 and the rest of that. You should also go through them. I think a lot of people had like a couple of questions which I attended to. And I want to still say something. Before you ask a question, make sure that you watch to the end. Just like this class now, if you are in this class at this time, right, and at the end of the class you have a question, it's going to be reasonable than joining the class like 5 minutes to 10 p.m. or something, and then you're asking something that I've emphasized 100 times to kind of like push everybody back, right? But then, welcome to today's class. We're going to be treating basic support and resistance. So, support and resistance is one particular aspect of technical analysis that has been like one of the oldest methods that we knew until it became, will I say, modified. It evolved when demand zones started being created out of these support zones. Resistance zones started being created out of these resistance supply zones started being created out of what resistance zones and the rest of it, right? But then it's one of like the earliest methods or strategies of trading. But for the purpose of this class, we're not looking at support and resistance as a trading strategy. Instead, we're going to be looking at it as a confluence, right? So it's going to be a confluence to your trading setup. But it's not like you're trading support and resistance, like you're making your entries out of this support and resistance. Now, it's very easy. I want you to visualize something. Let's say, for those of you that are very good at keeping friends here, let's say you have a best friend or a very close friend or family, associates that you're close to. Now, let's say you're sad or you are down on one Friday evening, just like today. You're very sad. And then you call this your best friend or your partner, your family friend, or anybody that is always there for you emotionally when you're down. And then when you call this person like uplifts your move. Emphasis on the word uplift, cheers you up. Do you understand? Emphasis on the word cheers you up. Brightens you, makes you feel better. That is exactly what we're going to call a supportive friend, right? Or a supportive spouse or partner, somebody that is always there when you're down, somebody that is there to like uplift you, support you to feel better, help you smile again, like help you boost your mood up again, right? That is what you're going to call as a supportive friend. Now on the chart, you see the same way that you have that supportive friend in real life, right? Somebody that tells you. Now on the chart, that is how I want you to visualize these areas of support. When price is falling down, prices, permit me to use a cliche that's moody. Let's say when price is moody, price is falling down, sad. And then it gets to a zone. Each time that it gets to that zone, it bounces back up. Now again, it is sad, it is crying, frustrated, devastated, depressed. And each time it gets to that zone, that supportive friend, it bounces back up. It is sad again, sad, tired, whatever negative feeling. And each time it gets to that zone, it bounces back up. it happens again, it bounces back up. Once a zone has been able to send price back up consistently at least 3 times, it is called what? It is called a supportive zone. A support zone, sorry, or an area of support, right? Just like your supportive friend in real life. Once you've had a zone that has been what, able to take price back up 3 times, right? It is called with an area of support. This area of support, it is believed that when price comes to that area of support, what happens? If it jets to the upside. When price comes to that area of support, it jets to the upside. Now, remember that I told you guys that we're going to be taking support and resistance as a confluence and not as a strategy. But people actually trade this as their main trading strategy. Trading just support and resistance zones. Like when price comes to a level of support that has sent price back up before, they now do what? They place their buy to and what they buy like that, right? But then you're going to be using this as just like an extract. When we get to demand and supply zones, I'm going to emphasize back on this, right? When we get there, I'm going to emphasize back on that. But I want you to understand I want you to be able to understand what these support zones look like. Now, the inverse of support is what? An area of resistance. Let's say you were given a contract, let me say $10 million, right? I hit $10 million in this area, above this area called what? A. Let's just call this area A. I hit $10 million there. And then to you, and I'm like, what name should I use? Okay, let me just say Faith. And I'm like, Faith, I have a job for you. I don't want anybody to come to this area that I hid this money. If you are able to do this, what happens? I'm going to trust me that you will try everything possible to push anybody trying to go above you to do what? To get that money. So just like the name resistance, it is that zone that has consistently rejected or resisted price to go above it, right? When you have price coming like this, and then it hits that zone, pushes it back. Price attempts to do what? Come back to that zone. It pushes it back down. Attempts to come back again, pushes it back down. For every time that price does what, the price tries to get to that area or that zone, what happens? It is rejected back to the downside. You don't want anybody to come to that $10 million so that you can get your own $1 million commission. You understand? That area that is like strongly injecting price, that has been able to send price back down at least 3 times, is an area of what? An area of resistance. Remember what I talked about here for the area of support? That area that has been able to send price back up. Good evening, boss. That has been able to send price back up at least 3 times is what? An area of support, right? So just like I said, an example as your supportive friends that have been able to uplift you when you're feeling sad. For every time your mood, like you feel very down, what happens? You reach out to that person, and somehow that person does what? Cheers you up, right? And then you're sad, you're depressed, whatever. And what happens? That person does what? That person cheers you up to the upside again, right? Now you're price is coming down in a devastated way. And what happens? This zone again pushes it back up. If somebody has been able to do this for you multiple times, trust me, you're going to see that friend as one of your supportive friends, right? One of your real friends, one of your good friends, all of that, right? So the way you understand or try to decipher the word support in real life is how you're going to be looking at it on the chart. You look at it as what? An area that has been able to send price back up, an area that has been able to assist price back up, an area that has been able to support price back up multiple times. That is what? An area of support. And then when it comes to resistance, an area that has been able to what? Reject price, send price back down, resist price from going above it. The resistance zones don't want price to go above that level. For each time the price gets to the level, what does it do? It tries to send it back down. For every time the price does what, the price gets to that level, it sends it back down. For every time the price gets to it, price attempts to break it sends it back down. For every time price tries to break past it sends it back down. Trust me, if someone gives you that contract of $10 million, you would fight tooth and nail to make sure that they don't get above, they don't get across, like they don't get past you to reach the money. Because why? You know that there is a stake if they do. Do you understand? So these zones don't want price to go above them. They keep pushing, right? So that area of the chart, you go to the chart and you see, for every time the price gets to this area, it sends it back down. Resistance. For every time the price gets to this area, price does not want to go below. Price does not want to go below this zone. Every time the price gets to this zone, it sends it back up. It does not want to see it below, right? Trust me, your supportive friend don't want to see you sad, right? The supportive friend don't want to see you go down. They don't want to see you sad. They don't want to see you all of that. So that is support and resistance on the charts, basically. So let's look at some examples. I think I mapped out some already before the class started. Let's look at one of them. Now, if you click on my screen, okay, I think I'll have to hold this a bit. All right. So here's what we have on the, let's see the daily time frame, AUD/USD. Okay. So here's what we have on the daily time frame, AUD/USD. If you look at this area here, we had price, we had price sell to this downside, right? Created this low at this point, and then it bought to this level, this same level, brought to this level, and what happened? It was pushed back down. It came back to the level again for the third time, and it was pushed what? It was pushed down massively. And then price came backwards to the zone again for the fourth time. What happened? It was pushed down massively. And what happened? It came back again to this zone until what? The eventual sales happened, which is what is currently selling here. You can see that this area has been able to reject price 5 times. For every time the price came to that area, what happens? It actually sells. For every time price touches the area, resistance comes again, resistance comes again, resistance comes again, resistance. More like I can't let you go past me. That is what your areas of what resistance looks like. When you see struggling price action, the price does not want to let this particular thing get past this particular zone, right? It is what a very good example of a resistance zone. Let's look at what we have here. This is a support zone on the 4-hour time frame of AUD/USD. Now, if you look at this zone, what is happening here? We had this move here that created this high. And then it came back down again, feeling sad, feeling unhappy, devastated, and all of that. And he's like, no, my friend, you have to feel better. You have to try again. Whatever words that your friends say to you when you're feeling down, right? And what happens? It shares it up back to the downside, uplifts it back to the downside, supports it back to the downside. Anything that you can narrate to yourself to grab this, you're free to do that, right? But then what happens again? It's coming back again, sad. What happens? It touches this zone and it rejects to the upside again. Comes back into that level, that same level. And what happens? It still rejects to the upside. It comes back into that level, rejects to the upside, comes back into the level, rejects to the upside, it comes back again, rejects to the upside, comes back again, rejects to the upside slightly before being invalidated. Now you can see this zone, that for every time the price comes back into this zone, what happens? It keeps bouncing back to the upside. Price is retracing in a bearish way. Remember I told you that a bearish market structure is a market structure that is selling, right? So the price is selling, but for every time it taps that zone, it starts buying. For every time it taps that zone, it starts going to the upside. That is a basic explanation of what a support zone looks like. Let's look at more examples. I think I have something marked out here again. You can see this particular zone, right? Now this flow was created. And then what does price do? Price puts in a new high at this point. And then it returns to the zone, see price coming in a bearish way, but then immediately it touches this zone, what happens? It moves towards, it moves to the upside. It is supported back to the upside. It comes back again for the third time, it pushes to the upside, comes back again, pushes to the upside, comes back again, pushes to the upside before finally being what? Invalidated, right? And if you look at other ones again, these are still more examples of what a support zone. You would see that for every time price does what, price comes into this area or this level, what happens? It keeps bouncing to the upside. This is exactly what you would call what at a level of support. For every time that price comes into this box, what does it do? It keeps moving to the upside. Once you've had a block that has been able to what, reject price 3 times or support price 3 times, that is what we call what, an area of what, support or an area of resistance. In this case, you see that for every time price comes into this block, what does it all happens? It keeps what, moving to the upside. Now, this is an example of what, a resistance zone, right? You can see for every time a price comes into this resistance area, what happens? It sells. For every time price comes into the resistance area, what happens? What? It sells. For every time price comes into the resistance area, what happens? It sells. Until what? It is eventually what? Broken. Let me see if I have more examples marked out here. I think I do. This is an area of what? An area of support. Yeah. You can see that for every time that price taps this, for every time the price comes back into this level, it buys. We had the first buy here, we had the second buy here, we had the third buy here, we had the fourth buy here, and then price was buying until it eventually came back to this level in the future, right? Now it came back into this level after everything it did there, and what happens? It does what? It buys. It comes back again for the 6th time. What happens? It buys. Comes back again for the 7th time, buys before eventually being what? Broken. This is a perfect example of what? Of a support zone, right? I think I still have another example mapped out here. They are everywhere on your charts, right? They are on your charts. When you see areas that have been able to reject price 3 times, right? Minimum of 3 times, they are what? Their support zones or resistance zones. Yeah, you can see that for every time price comes back into this box level, what happens? It is being rejected to the upside. This is what a very good example of what, of a support zone. This is what a very good example of a support zone. Price is coming bearish, buys, coming bearish, buys, coming bearish, buys, coming bearish, buys, bearish, buys, bearish, buys, until what? It is eventually what? Broken, right? So there are a lot of them on your chart. I could go on and on and on and on. Now, these support levels and these resistance levels, like I told you, we're not trading them as strategies, but I don't expect that any of you now, you open to your chart and then you see price as the stated is doing 3-4 times, and then what do? You now wait for it to come back and you buy or you sell, right? You're not trading them like that. We're definitely going for just using them as a confluence, right? For when we get to demand and supply. This is like a step by step, right? I'm just trying to explain it so that you guys understand it and it doesn't become blocky when we get there, right? So this is another example of what? Of a resistance zone. You can see that for every time price gets to this setup, what happens? For every time price gets into this zone, it sells. For every time price gets into the zone, it sells, right? It was selling continuously here until the day that it eventually remembered its old friend, yeah, and what happens? It still sells. And then it continued selling until the day that it managed to find its way back into that zone, and what happened? Price still rejected it to the downside. So this is it about support zones and resistance zones. I don't know if any of you are confused or you have any questions. Raise your hand. I'm coming. All right, maybe you can ask. Go ahead.
Okay, good evening, sir. Can you hear me?
Yeah, please just be a bit more audible, but I can hear you.
Okay, I wanted to ask, what makes a zone a valid support and resistance zone?
Yeah, I told you that when a zone has been able to what, to move price back up at least 3 times, it is what a support zone. But now, what makes it valid is if it's in the discount of price range. I didn't want to mention discount and premium until we get to market structure so that you guys don't get confused. But probably you can jot it down, and then when we get to market structure, you understand that properly. You understand? If a support zone has to be what in the discount of pricing, and a resistance zone has to be what in the premium of pricing. When we get to market structure, I will re-emphasize on this again. I just don't want to make it not very understandable, especially because of the videos. Do you get that? Okay, Jenny, I think you're gonna meet yourself now.
Hi, good afternoon. Can you hear me?
Good evening, I can hear you.
I'm sorry. Yeah, the zone, like, how big should it be? The area of the zone.
How do you what?
How big, what should be the size of the zone? Is it just like a random?
No, it depends. It depends actually. It's not like there's it depends on the time frame one. Do you understand? It depends on the time frame. But majorly, if you can map out, you see something like this now, right? If they were a bit, would I say to this point here now, let's say they all started from this area. Yeah, right? Of course, I won't be mapping out my zone from this level. They would now be at that level. You understand? So long as they are like very closely related and you can trace at least 3 of them, that if you map out an area or a box, right, that 3 of them can enter into that box, like they are very close, that price action, then it's an area of support or resistance. I don't know if you get what I'm saying. Okay. Maybe do you still have something to ask? Or you don't want to talk before? If you're not, you can unmute yourself now. All right, okay, it's done. Mike, go ahead.
All right. So, is there a number of times, like when price bounce from the support and resistance zone, that we can get an insight that invalidation is about to occur?
Yes, there's something called the fifth rule when it gets to support and resistance zones. Especially, the reason why I didn't mention this thing again, like I said, most of these things are waiting for market structure to start before we talk about it because of newbies again, right? You know, support and resistance, there are 2 types of support and resistance zones. We have what we call the static support and resistance, and we have the dynamic support and resistance. This static support and resistance is this one that I'm seeing here, that you just map out an area and you're waiting for what? For price to get to it and all of that. The dynamic support and resistance zones, that is what you see people call trend lines. Dynamic means moving, right? So when you have something like this, you see your trend lines, they are what? They're support and resistance zones. Just that they are moving support and resistance zones. Because for each time the price gets to what? A downtrend line, you're anticipating what? A sell. For every time the price touches an area like this, that's the downtrend line, you're anticipating that price sells something like this. Or for every time the price touches what an uptrend line, you're anticipating that what the price buys, it is also what? It is also an area of what? Support. It's just that in this case it is what? A moving support zone, or better called a dynamic support zone. Do you understand? So which means, back to your question, which means that the fifth rule of trend lines also apply to this support and resistance zones, which means that for every time, the more that a support zone or a resistance zone is respected, the weaker that it becomes. This means that a support zone that has been tested 8 times and still holding is weaker than the one that has been tested just 3 times. So the lesser the touches on a support zone, the stronger it is. Do you understand? The more a support zone is tested, the weaker it becomes. So which means that a support zone that has been tested was just 3 times, is stronger than the one that has been tested 8 times. And then there's something called the fifth rule when it comes to this support and resistance zones or trend lines, which means that if a support or a zone has been respected 4 times, from the fifth touch, you start anticipating it to fail. Do you understand? Most likely, sometimes they usually fail on the fifth touch. So that's why there's something called the fifth rule, which states that on the fifth time, that is when the weakness starts. Do you understand? I don't know if that answers the question, Mike. You're gonna meet yourself. Are you clear?
Yes. Perfect.
All right.
Perfect. Yes.
Samson, good evening. Go ahead.
Yeah, good evening, ma. Good evening, everyone. So, I have a question, and my question is, when mapping out support and resistance as a day trader, is there any particular time frame to do that? And does all support always come back to retest before breaking out?
Yes. For it to, I told you that actually what makes it valid to hit is what if it has three touches. So which means that it has actually retested 3 times. You understand? There are times whereby it can fail on the fourth or just have a little reaction, fail on the fifth. Most of them actually fail on the fifth, sometimes sixth. Do you understand? But then so many times the fourth one is being respected actually. Just that, like I keep on emphasizing, we're not going to be trading this as a strategy. It's just going to be a confluence. Good evening, please let me call you back. I'm in class, I'm coming. It's just going to be a confluence to your trading strategy, which I'm going to emphasize more as we go on, right? And then, what was your second question? Sorry, you can unmute yourself. What was the second question? Samson Granson.
Sorry, I was muted. I was asking, my second question was, in day trading, does mapping out support and resistance has a particular time frame?
So, generally, time frame correlation is very important when it comes to trading. Do you understand? Which means, and these time frames are usually subjective. What is higher time frame to swing traders is different from what is higher time frame to you. So whatever time frame you look out for to map out your narrative is probably where you're going to be looking at the support and resistance zones. Of course, if you go to a time frame as low as 5 minutes, you see so many of them because there's a lot of things going on those time frames. Like for the 4 hours time frame, I think I've mentioned this class before. For the 4 hours time frame, one candlestick on the 4 hours time frame is going to give you 4 candlesticks on the 1 hour time frame, right? One candlestick on the 1 hour time frame will be like 2 on the 30 minutes time frame, right? So the lower the time frames, the higher the number of candlesticks. And you don't want to have a lot of things clouding your analysis. So if I ask you to map out these support and resistance zones, I advise that you actually go to the higher time frame for clarity. You understand? You can go to the higher time frame. You can use the 4 hours. You can use the 1 hour time frames and above. I don't know if that answers your question, Samson. You're gonna meet yourself. Are you clear?
Ma'am, thank you so much. Yes, it does. Thank you so much, ma'am.
All right, so Bamsin, I don't know if that's correct. Bamsin, you're gonna meet yourself.
Yeah, good evening.
All right, good evening. Please go ahead and you don't have to do it, just make it fast.
Please, can you share more light on that static and dynamic support and resistance zones?
Okay, so what I taught you now is actually static support and resistance. And I said that I'm not going to talk about the dynamic support and resistance yet until we get to market structure. This is because it's going to be easier for you to understand, like very easy to understand. You understand? But I was trying to show you examples which I mapped out here. I don't know, have you been trading before now? I don't know if you can unmute yourself. Let me confirm. All right. I think you're gonna meet yourself now. Have you been trading before now?
Yes, I can hear you. Yes.
Okay, you know what trend lines are, right? You know what trend lines are?
Huh?
You know what
yes,
trend lines are? Exactly.
Yes,
So your uptrend line is an example of a dynamic support zone. For everything the price comes to a trend line, anticipating what a buy is, of course, right? Why
Yes.
a trend line is an example of what a dynamic resistance zone. But for every time the price touches your trend line, what are you anticipating that it sells? So that's what I'm talking about when I talk about the dynamic support and resistance zones. These ones are the static ones that are just like your own place. The dynamic ones are the moving ones, those are the trend lines. You get them?
Yes. Thank you very much.
You're welcome. Greg, you can unmute yourself. Good evening. Greg, can you hear me?
Yeah, good evening.
Go ahead, please.
Yeah. According to your screen here, you marked the support and resistance zones with a rectangle tool. Yeah. So I wanted to know how wide is the rectangle supposed to be?
Okay, I talked about it before. I said that it doesn't have to be like very wide though. If you look at what I did here now, you can see that like I mapped it out in an area that is like closely related. You understand? In a way that okay, I'm trying to map out up to like 3 zones that price that stopped. But it does not have to be so wide. It has to be that those areas that are actually included in the box, they are very closely related. Do you understand? You can see that this one here and this one, they are very close. Do you understand? They can be attached as they can be attached as highs in the same area. If you look at this one that I did here as well, if you look at this one now, these lows are very like they're in the same area. I can call them lows on the same level. Do you understand? So if you're attaching anything as a support or a resistance zone, they have to be closely related. You can see this resistance zone now. It's not like I included this one here now as part of my resistance zone. Like I went below now to say that this is part of the resistance zone, right? By now extending this like this. Do you get? This is where it now gets out of place. So long as they are closely related, they can be included in a box. I don't know if you get what I'm saying. You're rectangular too. Who asked that question?
Okay, makes sense.
All right.
Yeah.
Good evening, David John. You can go ahead.
Hello, good evening. Please, I want to ask a question concerning the dynamic support and resistance you were saying, which was, is it compulsory that it must have like the fifth touch must be the breakout before we take a trade on that, or even if the third touch was a breakout, we can actually still be anticipating a move to the upside?
If the third has broken out of the register, out of the support and resistance, it is no longer support and resistance. I told you that you can make yourself and come down to it. I told you that what validates an area of support or demand is that price respects it like 3 times, right? Before you now map it out as an area of support or demand. That level must have been respected like 3 times. You should have like 3 touches on it. Do you understand? So if it breaks out on the third one, it's not valid anymore. Also, I talked about this thing. I talked about the dynamic resistance and support. The dynamic support and resistance zones. I mentioned that I didn't teach it here yet. I only emphasized on it because of somebody made reference to it, right? I was making reference to it in respect to the static and the static support and resistance. So when we get market structure, I think you understand. Please, whoever is sending this nonsense, stop. So I talked about, I mentioned that when we get market structure, right, we emphasize more on those trend lines. Do you understand? So just be patient. Don Baba, or I don't know, 0323. Can you hear me?
Yes, ma'am. Good evening.
Please go ahead. Good evening. Go ahead, please.
You said that for an area to be considered a support or resistance, it must reject a zone at least 3 times. So my question is that is support or resistance zone valid 2 times, or it must be at least 3 times?
At least 3 times. At least 3 times. Protocol is protocol. At least 3 times.
Okay. Thank you, ma'am.
Michael, good evening. Go ahead. If you're trying to talk, I can hear you. Praise, good evening. You can mute yourself. Only great praise, I think.
Okay, good evening, ma'am.
Good evening.
There was something you talked about. You made mention of the fifth. I don't know if I'm right, but you made mention of fifth rule and fourth rule. So, let me understand if you like what that fifth rule means.
Okay, so there's something called fifth rule in trading. I think it was when somebody asked the question, like, when do you start anticipating that an area of support or resistance fails? That is when I talked about it. Now, this fifth rule usually applies to trading, to trend lines. That's the dynamic support and resistance zones and the static support and resistance zone. This is what the fifth rule looks like. It says that, like, when price respects a zone, like 3 to 4 times, on the fifth touch, you start anticipating that zone fail. Now, remember that these support and resistance zones, they won't always support price forever. Some of you have had friends that probably you guys have been friends for like 4 years, and then you guys, after a while, something happens to fall out, right? It's not all of you that the friends that you had from your childhood are still your friends till now. That is how these support and resistance zones are on the chart. There are times whereby they're just like, oh, man, I'm tired of helping you. You can just go. I'm weak, I can't carry you anymore. I have to focus on myself. I think that's the popular wake-up line. I'm the problem. I have to focus on myself, right? So there are times on the chart whereby it does something like that. Oh, I think it's time to focus on myself, and then they let you fall, right? Or at the point they are trying to resist you, and it's like, no, I don't think I can hold this anymore. I'm tired, my hands hot, and then they let it pass, right? And that means that resistance area has failed. So on the chart now, where you have price come to the a level of support 1, comes back to that level of support 2, comes back to that level of support 3, right? Create a support zone at this point, right? And then it comes back 4, and it comes back 5. Now, here's what the fifth rule states. It says that on this fifth touch now, you're anticipating that anything can happen. Focus on that, which means that any support from this particular level of support, you're going to be looking at it as what? As a low probability support, which means it may not hold though. This your friend is no longer trustworthy. This person may not be there for you again. Do you understand? So the fifth rule simply states that on the fifth touch, on any area of support or resistance, it is now considered what? It is now considered weak, which means what? There are high chances that it will not hold, or it may not hold. Do you understand? So whenever you see a level of support or resistance and it has had like 5 touches, you're going to start looking at it as a low probability zones. I don't know if that answers your question. I think the person is down already. All right. So Raphael, good evening. Sorry.
Good evening.
Good evening.
My question is, the number of touches, let's say it touches the zone, must it break the previous structure to be valid?
No.
Or not?
So long as it rejects, you understand, significant rejection. I think you know the meaning of significance, right? So long as the rejection is not negligible. Negligible simply means little or no reaction. You understand? So long as the rejection is a significant rejection, it's going to be counted. Do you understand? Let's look at one of those. Now you can see this one's that I mapped out here now. You can see that for every time that price comes to those levels, you can see the way this one here now did not break structure. You get? This was the previous low before this low. So it didn't go below this low. But what happened? When it got there, like you can see that the rejection was significant. This rejection as well. This rejection was significant. It was not like something like this. I don't know if you get what I mean. It was not something like this. So it was a very significant rejection. So the rejection has to be significant. You need to look at it, and you don't have to look twice to say, oh, is this significant or not? It has to be clear. Okay, let me use clear instead. Right? So it has to be, this situation has to be what? Actually clear. Wafio, are you clear now? Do you understand?
Yeah, I do. Thank you.
You're welcome. Okay. I think 3 more people left. Tony, good evening. You're gonna meet yourself.
Yeah, good evening. Can you hear me?
Yeah, of course.
Yeah, so you've already answered the first part of my question. So the second part is, now if you are using support and let's use support as an example now. If you are using it as confluence, now let's say it has already the candle has already not the candle. Let's say the zone has been revisited 3 times already. Now are we to wait and anticipate it to get invalidated, or we have to expect we have to use it to trade in the direction of in the initial direction? Like, for example, are we to expect it to still act as let's say support or resistance, or we have to wait for it to get invalidated before we start looking for our entries?
I think they're just trying to confuse yourself. I've not taught you how to use as a conference. I only know that I am teaching you now because we're going to use it as a conference later on, but I've not taught that. Right? So you're just trying to put it together yourself, and you end up confusing yourself or anything. Just allow me to take you step by step. Maybe we're going together. Right?
Thank you.
Kelvin, good evening. Go ahead.
Good evening.
Yeah, good evening.
Yeah, my question is this. When you want to draw your support or resistance, do you use is it for the chart, to the example you gave, I see you use trend line on dynamic support and resistance. Then why on the normal time frame, the normal market structure, you use the rectangle? You get what I say? So I was trying to what I'm trying to ask you, is it okay to use line on normal market structure or just on trend line?
Okay. So you can use line on your market or your normal market structure. It's just that this horizontal to kind of pinpoint what you're talking about. And when it comes to trend lines, the reason why I have to use a trend line to show the dynamic resistance is because you see this two only goes in an horizontal way. You understand? There's no way I can bend this particular thing now to fit into the slant position that the trend line can move in. You understand? So nobody is telling you that there's no exact way to mark this place out. However you want to mark it out, you can. If you decide to use your highlighter tool now to show area of resistance, you can. If you decide to pick your path to draw multiple times just to show what area of support, you can do anything. There's no written template on how to do it. It's just whatever makes you. So long as at the end of the day you're making money or whatever, you can map it out anyhow that you want to, right? So Mr. JFX, whoever is raising their hand after these 4 people should ask that question on the group. Okay, JFX, you can ask Chigwek. I think
okay, good evening. Good evening.
Good evening, this guy.
You spoke about rules, but you didn't talk about the first rule, second rule, or the third rule. You only skipped to the fifth and third, I guess. So my question is, are you going to tell us about the rules serially in the subsequent classes we'll be having?
Okay, so no. It's not like there's a first rule, second rule, third rule, or fourth rule. It is just called the fifth rule. And that's because it's emphasizes on the fifth touch on a support or resistance zone or a trend line. It's not because there are other rules before it. It's just that the emphasis it's making is on the fifth touch or tap on the zone. I don't know if you're clear. Do you understand that?
Yes, I do. Yes, I do. Thank you.
You're welcome. Mr. Chigre.
Yes, good evening. Yes, please, I have a question. And my question goes like this. Is it possible for a support to also become a resistance and for a resistance to also become a support?
Yes, it is. It is very possible. There are times that price can invalidate an area of support and then go back to retest it. You understand? Now that retest to you know what I mean? Like price takes out an area of support and then creates what? A resistance. More like it takes it out and then uses that same zone to start selling multiple times. You understand? So if price can sell from that zone like 3 times, automatically that's created what's a resistance zone. So there are many times price you can have price doing a support zone flips to a resistance and a resistance flips to support. You understand? But then you can still identify them individually. I don't know if that's clear for you. Mr. Q079 or Mrs. Sorry, you can go ahead and answer again.
Good evening, ma'am.
Good evening, boss.
Okay, on these support and resistance zones you drew here, these things happened previously on the chart. Now my question is, if I want to draw them on a live chart, am I starting from the candlestick, or am I like going to draw the support and resistance from the previous candles?
Okay, so let me clear my charts. Something like this now, right? And then let me put price. Let me put price from here. So if you look at this area now, this is an area that I've seen that okay, price has come to what? Price has come to the test twice, right? And then I'm watching out to see what's going to happen. If price is going to come close to this particular zone, you understand? Now playing price, let's see what happens here. You can see that price gets to that zone again, similar zone, and starts selling. Now, if I'm going to map out an area of resistance around here, it has to be, since they are very similar in price action, you can see that this is the action of this leg, this is the action of this leg, and this is the action of this leg. So they are very close. I'm just going to map out a box that includes the three of them, right? It's very different from including something as far as this. Do you understand? Since they're similar, I'll just map it out in a way that three of them are included, right? And then trying to see if a fourth one is going to come and still be included in it. I don't know if you understand what I'm trying to say. You understand? So this is how like you anticipate this resistance zones. Price has come to this zone and has visited 3 times. So you're not anticipating that if price comes back to this zone for the fourth time, we're going to see what we're going to see a sell. So playing price now, price is still selling, and then it starts to it's still selling at this point. Let's wait for the point whereby it gets towards it gets back into that level of resistance. So it's still selling, right? And I think at this point it starts retracing to the upside. It's still retracing back to that level, right? After creating first 3 caps. And then if you look at what happens here now, price gets, you can see like it gets into this same particular level that this other ones are. Do you understand? And then it starts affecting. Do you understand? So you're mapping it out, so long as they're very closely related, the mapping it out in a way that it includes all of them. Do you get?
Yes, ma'am. Thank you.
All right. You're welcome. Okay, the last person. Right, good evening. I think you're gonna mute yourself now.
Good evening.
Good evening, boss.
Yeah, my question is the support zone. If it supports the first time, the second time, third time, to the fifth time, what do you say is really gonna happen? And same as the resistance zone.
As at the fifth time, there's something called the fifth rule. Now, this fifth rule simply states that for the fifth time that price comes to a zone or touches or taps, whatever you want to remember it as, an area of support or resistance, right? You're anticipating that it becomes weak enough to fall. So if it was high probability for you on the fourth touch, by the fifth touch, now answer anticipating that this price can now fall. Do you understand? Most of the time, the support and resistance zones get invalidated. They usually get invalidated on the fifth touch. You understand? So that fifth rule just looks like there will be an invalidation zone on this support or resistance area. Do you understand?
I understand.
All right. So I think that's it for all the questions here. For those other ones on the book, I'll check. If there's anyone on the book, I'll definitely reply to that. So thank you so much, guys, for coming to this class today. See you guys again tomorrow by 9 p.m. Stan, you can end the recording.